Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate world together. And let me tell you, Forward Industries has a bit of paperwork to get through this time, so buckle up. We're diving into a report from Forward Industries, a company that's been around for a bit. Now, usually these reports are about big financial news, new product launches, major mergers, or maybe a big earnings surprise, but this one is a little different. It's not about the day-to-day operations or the financial feast or famine you might expect. Instead, it's a very specific legal document, a kind of official stamp of approval on a past event. The main reason Forward Industries is putting this report out is to officially file a legal opinion. Think of it like a lawyer giving a thumbs up to something the company did. What did they do that needed a thumbs up from legal eagles? Well, they sold some of their company stock, which is like selling tiny pieces of ownership in Forward Industries. This report tells us that Forward Industries sold over 1.7 million shares of their stock. Now, they didn't just sell these to anyone off the street. They sold them specifically to two investors who are described as accredited investors. This is a term used in finance for individuals or entities that meet certain income or net worth requirements, meaning they're generally considered financially sophisticated enough to handle the risks of investing. The price point for these shares was $18.50 and eat certain income or net worth requirements, meaning they're generally considered financially sophisticated enough to handle the risks of investing. This sale happened as part of something called a registered direct offering. Essentially, it's a way for companies to quickly sell a large number of shares directly to investors. The registered part means they followed all the proper rules and regulations with the Securities and Exchange Commission, or the SEC, the government body that oversees companies and the stock market. This particular stock sale was done under a specific type of registration statement known as a Form S-3, which is often used by companies that are already reporting to the SEC regularly. It's like saying, we've already told you a lot about ourselves, so we can streamline the process for this new offering. The filing date for this registration was back in June of 2025, and it was officially approved or declared effective by the SEC later that same month. So the legal opinion being filed now in September is essentially confirming that everything done for this stock sale, from the initial registration to the actual issuance of shares, was all legally sound. The company is essentially providing proof that the lawyers who looked at this stock issuance, Nason, Yager, Gerson, Harrison, Fumero, PA, have given their seal of approval. This legal opinion is crucial for ensuring that the shares are validly issued and can be traded on the market without any legal questions hanging over them. It protects both the company and the investors who bought the shares. This filing also includes the consent from the same law firm. This consent means they agree to be named in the report and that their legal opinion can be used by the company. It's another layer of official documentation confirming that the legal side of this stock offering is buttoned up tight. Let's touch on what they actually issued in terms of stock. It's their common stock, which is the most typical kind of stock a company has. Each share has a par value, isn't really about market price. It's a very old accounting concept. What matters more is how many shares are out there and what they're worth on the stock exchange. And for those who want to follow the company's performance on the stock market, the trading symbol is FORD. This stock is traded on the Nasdaq Capital Market, which is a segment of the Nasdaq Stock Exchange known for listing smaller companies, but it's still a significant regulated market. Now, let's talk about the broader implications of this. Why did Forward Industries need to sell stock? Companies sell stock for various reasons. Sometimes it's to raise money for new projects, to pay off debt, or to fund operations. In this case, selling shares directly to accredited investors at a set price of $18.15 per the necessary paperwork in place to do so efficiently here if the stock was trading much higher. This could be seen as a discount to raise capital quickly. If it was trading lower, it might signal a need for cash even at a less favorable price. Without seeing the stock price at the time of the offering, it's hard to judge if this was a great deal for the company or a necessary move out of a tight spot. However, the fact that they are filing this legal opinion now after the shares were sold and issued means they are ensuring all the compliance boxes are ticked. This is good practice for maintaining investor confidence. Percent is the key number here. If the stock was trading much higher, this could be seen as the key number here. If the stock was trading much higher, this could be seen as a discount to raise capital quickly. If it was trading lower, it might signal a need for cash even at a less favorable price without seeing the stock price. While this filing doesn't give us a deep dive into the company's latest financial performance in terms of revenue or profit like a quarterly report would, it does reveal that Forward Industries is actively managing its capital structure. They are engaging with investors and using the stock market as a tool to achieve their financial objectives. The legal opinion serves as a confirmation that these financial activities are being conducted with proper oversight and legality. Let's think about what this means for the average investor or observer. Companies that are actively issuing stock, especially through direct offerings, are often in a growth phase or looking to strengthen their financial position. This can be a positive sign indicating ambition and a need for resources to fuel that ambition. However, it also means that the ownership pie is being sliced into more pieces, which can affect earnings per share if profits don't grow at the same rate. The involvement of accredited investors also suggests that this was a more targeted fundraising effort rather than a broad public offering. This specific report on the surface seems very technical and focused only on validating a past stock issuance. However, delving a bit deeper, it hints at the company's financial strategies and its commitment to regulatory compliance. It shows they are actively working with their legal and financial advisors to ensure all their corporate actions are above board. Now, looking at Forward Industries from a broader perspective, they operate in a sector where, like many others, efficiency and strategic financial management are key. Companies in this space often need capital for innovation, market expansion, or even just to navigate economic fluctuations. The decision to sell shares and then have that issuance legally validated through an 8K filing, supported by detailed legal opinions, signals a company that is being diligent in its financial dealings and shareholder communications. It's a sign of good corporate governance. However, without the accompanying financial statements that would typically be part of a larger filing like a 10Q or 10K, it's difficult to assess the company's overall financial health or its strategic direction based just on this report. This 8K is more of a footnote, a confirmation of a specific transaction. It's like getting a receipt for a car purchase. It confirms the deal happened, but it doesn't tell you if the car is a lemon or a sports car. The key takeaway here is that Forward Industries is actively managing its capital. The sale of over 1.7 million shares at $18.50 per share to accredited investors, as confirmed by the legal opinion from Nason, Yeager, Gerson, Harrison, Fumero, PA, demonstrates they are utilizing the equity markets to fund their activities. This type of transaction, while not a direct indicator of operational success or failure, is a fundamental part of corporate finance. It indicates a company that is aware of its capital needs and structured to meet them in a compliant manner. So it's my take on Forward Industries based on this particular filing. It's a very focused report, essentially a legal housekeeping item. It tells us the company is getting its ducks in a row regarding past stock issuances. It suggests they are being proactive with compliance and transparent with the SEC, which is a positive. However, it doesn't give us much insight into their current financial performance or future prospects. For that, we'd need to see their earnings reports or other more comprehensive filings. From this snapshot, we can say they are a company that is actively participating in equity markets and ensuring its transactions are legally sound, which is a necessary foundation for any business. Before you go, if you found this simplified breakdown helpful, please give this video a thumbs up. It really helps us out, and if you want more of these straightforward explanations of complex corporate filings, make sure you're subscribed. We also have a fantastic community over on Discord where we discuss these topics further, linked in the description below. What are your thoughts on this type of filing? Does it tell you anything about Forward Industries? Let me know in the comments. Thanks for watching, and I'll see you on the next episode of Corporate Decoder.